chances are you're a stacker because you're here on the Junius Multi channel. The other chances are you've been watching metal prices lately thinking, what's going on? Well, it's pretty complicated stuff. There's oil, global economics, wars, U.S. stock markets, currency situations, the Federal Reserve decisions, all of these different factors on top of what we consider to be at times a little bit of possible, manipulations. We're not going to talk about that. We don't really care. I've often reminded you I don't really care about what the metal prices are because it's not, I don't look at them in terms of, dollars. The currencies float and fluctuate. My metal maintains its value over the span of time it always has for over 7,000 years. And one thing metal never does, ever, never, will never do. Metals never go to zero. They just don't. It's impossible. They never have, they never will. They cannot be worth zero. And there's a lot of reasons for that, but we're also not going to get into that. That's not the point. Because there are things that do go to zero. We're going to talk about those. Typically, stocks, different varying stocks, one of the most famous over the last decade has been mortgage-backed securities and stocks related to lending companies or banks that are heavily invested or tied to real estate, mortgage-backed securities. This is out of Canada, and this came from one of the subscribers here who corresponds with me quite often. I got to give him props. Jeff Bromfield. He texted me this chart the other day, and then it set off a conversation of discussions via email about, this crisis that's taking place in Canada. So home capital slumps as new loan flags existential crisis. This is by Allison McNeely and Doug Alexander. Of course, it's a couple days old, but the news is still relevant, and wait until you see these charts. But this is home capital's stock chart. Home capital plunging on liquidity crunch, lender facing dwindling deposits. You can see there just mid-March it was trading well above $25 a share, and then just recently plunged below $10 Canadian per share. And you thought your silver chart from this week looked bad. Home capital shares dropped the most on record in Toronto trading, and this is what a 7-day chart looks like with them. Look at that cliff from $17 to below $7 a share in a very brief period of time. This is a chart you can almost be certain will not happen right now with silver. Silver's sitting right around $16.90. Well, let's call it $17 a share, an ounce. I don't see within an hour or two silver plunging from $17 per ounce to below $7 per ounce. If that happened, the floodgates would open upon silver, and you and I would be purchasing quite a bit of it, I'm sure. It's not going to happen. That's a scenario that's, it's hypothetical. But the point is, these little made-up companies that play their little games and gamble and do what they do, it's exactly what it is. It's smoke and mirrors, and it's a big game. Part of me wonders if this is like a Bear Stearns event up in Canada, if this is like the incipient stage of the Canadian housing crisis that we've heard about possibly coming over the last few years. Home Capital Group Inc.'s shares plunged more than 60% after the mortgage lender disclosed a costly new loan to tide it over as its deposits dwindle, intensifying a spiral of bad news for the company. The $2 billion Canadian currency, $1.5 billion U.S. currency loan is coming from an institutional investor that Home Capital did not identify, and the lender's agreement is non-binding. With a 10% interest rate plus other fees and charges, the company is effectively paying 22.5% on the first $1 billion Canadian it borrows, which falls to 15% if it uses the full $2 billion available to it, according to James Gloyn, an analyst at National Bank of Canada. And here's just another look at some of the charts for Home Capital Group, you can see it just plunged there. And then at the very end of the article is a comment. I always like reading some of these comments. Sudden shock says, insolvent by end of May, stock to zero. The reason I selected this particular comment to place in the video here is because it reminded me of what we always discuss here when it comes to metals versus these paper markets and these scams, essentially. The metals are always there. They'll always be there. If you had stock certificates for this particular company and you buried them in a chest somewhere, watertight, sealed, and protected from the environment, well, chances are in 100 years or 50 years, the best chances are within 2 weeks, if you dug them up and took those certificates out, they wouldn't be worth anything. However, if you took your hoard, your cold, heavy, clanking coins of precious metal and bars, and you put them in a chest and you buried them and you dug them up in a week or a year or 100 years, no, even 2,000 years from now, they're going to hold value. They're going to purchase goods and services, and they will transport your wealth over time very well. Of course, metals are not an investment, they're a hedge, they're a protection. They're not going to jump from $7 a share to $1,000, pending unless it's some major currency disruption, which could indeed happen. We've talked about that. That's a whole other issue, though. My biggest point I like to make with the metals, as it relates to this article and this recent news, is that they never do this. They don't go to zero. They don't fall out of the sky and evaporate and vanish and turn into some dysfunctional, disheveled company of beggars out looking for a loan so that they can stay in business and continue to scam people. Well, metals don't have any counterparty risk. They don't owe anybody anything. And so therefore, this can't happen to metals. Yeah, metals have had a tough little week here, but guess what? That's good buying time for me. As a matter of fact, I purchased some metals just based on these recent prices. I mean, do you really think this trend is ever going to change? Do you think somehow the US dollar, the pound sterling, the euro, all these fake fiat currencies are going to ever pull out of their death spiral? No, they're going to continue to use all of these central banking techniques of quantitative easing and manipulating interest rates artificially low and suppressing them. And as the money supply continues to expand and the currency becomes worth less and less every year, as it always is, ultimately, the other adage we talk about will come true. Every fiat currency ultimately will one day return to its intrinsic value, which is zero. Just like that stock we just looked at will eventually go to zero, most likely. The currencies will also eventually go to zero. But guess what will not go to zero? The metals. They will not go to zero. Over time, your metals are going to maintain your wealth and hold it and keep it for you. So when you need it later on, if you want to buy a piece of real estate, or if you want to buy a new vehicle, or make some other type of purchase, they'll be there to unlock what you hid and locked up within that metal at that time you purchased it. There's a reason the whole world's scrambling after gold, while the East is importing it every day, and the amount that they're importing is increasing constantly. There's some article clippings here that I wanted to read for you. Reuters reports that physical gold bullion arriving into China via Hong Kong, its main vein for gold imports, more than doubled month on month in March. Well, that's pretty bullish. But part of the frustrating thing about China is they're so danged secretive about their gold markets, gold holdings, you name it. However, there is another measure of Chinese demand for imported gold. It flows through Switzerland. And sure enough, somebody has been buying a lot of physical gold from Britain and shipping it into Switzerland. What happens to the physical gold there? Well, big bars of gold, the kind stored in London, are melted down and recast into smaller bars for sale in Asia. Quote, gold exports from China from the refining hub of Switzerland almost doubled to 46.4 metric tons in March, according to Bloomberg. That's up from 23.6 tons in February. Another 30.29 tons went to China. You get one guess where that gold ended up. And let's not forget India. India's physical gold imports from Switzerland soared to 72.5 metric tons at the same time. Singapore is a big buyer too. Singapore is often a, quote, back door, unquote, channel into China. Singapore also exports physical gold all across Asia. So you get a Swiss gold export chart that looks like this. So there's your Swiss export chart right there. The tons upon tons of gold going to the east via European routes and so on, as well as gold that makes its way through the UK and then disperses also to the east. So just remember, when you're holding your precious metals, your silver bars, your coins, your rounds, your poured loaves, your bricks and your buttons, your 1 ounce pieces of gold, or your large kilo bars of silver, remember that no matter what happens, they're never going to be worth zero. Ever. But there are people out there that put their money into paper assets, stocks and bonds, and other dysfunctional things that are run by men, where wealth is gambled and lost, where money can disappear and turn into a vapor, never to be seen or found again. And you can take comfort in knowing that your wealth can never turn into a vapor. It is a liquid. It's liquid wealth, oh that's surely, but it can't be vaporized like those paper markets that burn up and turn into smoke, just like we saw on those charts early in this video. And it will happen again. Everyone's riding high right now. They're feeling good. Dow's skying, people are dying, and people are getting rich and they love it. But one day, it won't be the way it is right now. And the real wealth will be physical and will be right where you said it last. Well, thanks for being part of the Junius Maltby channel for another motivating reminder why we stack. Keep stacking metals, stay debt-free, and be comfortable in knowing your wealth cannot be taken from you. All right, have a good day.